Are we live? Are we live? Y'all tired of that yet? Hey. Hey, financial besties. How you doing? How you been? Welcome back to the channel. Welcome back to the channel. If you clicked on the thumbnail, you already know what the topic is about tonight. Let's stop doing broke people with our money. And why do I call it broke people? Because I did it. And it kept me robbing Peter to pay Paul. It kept me in a financial hole. It kept me chasing money, taking one step forward and two steps back. It kept me on the hamster wheel. Let's get off the hamster wheel. Let's get off what I used to call the corporate slave ship and prepare our money so that we can make some money babies in 2024. Y'all with me? Y'all with me? Let me say hi to my besties. Let me say hi to my besties. Who's with me live tonight? Where my financial besties at? I know there's some delay in the chat sometimes, so I'll give you a minute to get in here. But let me know you're here when you get in here. Drop some money babies in the chat. Y'all know I love to see the money babies. And if you're watching the replay, hey girl, hey, comment replay gang and drop your money babies in the comments. Yes. Let's see who's with me. Hey, Eileen. Hey, girl. Hey. Hey, Elle. We got the crew. We got the regular crew. My besties here with me. Yes. Hey, Kimmy. Hey, Black Women Build Wealth. Hey, girl. Hey. And Eileen. Oh, you know what? Are you using the members only emojis? I wonder why it's not working. I'll have to check that out. I'll have to test that out. We can do a live together to test that out, a private live. I'll send you a message to arrange that. Hey, Shalonda. Hey, girl. Hey. Dropping money babies from the car. I love it. Hey, Gail. Hey, girl. Hey. How y'all doing? I was so happy. It was Friday today. I'm actually happy to be here. But whether you're watching live or watching the replay, I love you all. I really do. I really appreciate your support. And I'm so glad that you're here. But if you are new to me, hey girl, hey. My name is Malika, and I am a money coach. I usually share a little bit about my money story when I get started so you can understand the context that I speak from. But my financial journey began as a single mom on welfare. And I was on welfare for almost 10 years until I learned how to invest in the stock market. And I had a few years of trial and error. It wasn't all go, all go from the beginning, but I had a few years of trial and error. But eventually I achieved financial independence. And in May 2022, I took a sabbatical, but I consider that the date that I retired early. But I took a 6-month sabbatical, ended up never going back to work, and I didn't officially resign till October. But I'm claiming May 2022. I resigned from my career, and I have been slow traveling the world ever since. I've been slow traveling ever since, and I love it. 2023 was my first official full year of freedom, and I love it. But as a money coach, I help women who also desire financial independence. So through my company, Fabulous Financials, I help you learn how to invest with ease. And I say with ease because I know you're all busy and you have a lot of responsibilities that you juggle. You have your career, you have your family, or you have children that you take care of. So I help you learn how to invest with ease so it doesn't compete with any of those other responsibilities. And I also help you avoid the many mistakes that I made in the stock market so you can achieve financial independence to live whatever you love. And if that sounds like your vibe, I invite you. Join my tribe of financial besties. Look at them over there in the comments. Join my tribe of financial besties and subscribe to my channel. Go ahead, hit that subscribe button down there, right below the video. Subscribe to my channel and turn on that notification bell so you will know the next time I upload a new video or go live, which I tend to do. You know what? I'm going to say it with conviction now. I'm going to say it with conviction, which I do on Friday nights at 7 p.m. Eastern. So welcome. In 2024, I'm going to commit to weekly lives consistently. Y'all hold me to it. But let's get into the topic. Oh, we got some more besties in the house. Let me speak to you all. Hey, Justine. Hey, girl. Hey. Hey, KJ around the world. You're not tutoring tonight? Hey, girl. Hey. And hey, Chef B. Peace and love. Where your money babies at? I like the peace and love too, but I like your money babies. Where your money babies? And yes, like Eileen said, appreciate you, sis. Don't forget to hit that like button and share this video. Share this video because after we talk about some of the broke people, I'm also going to share with you how I am prepping my finances to end the year in a good position so that I can continue making money babies in 2024 without a job. So share this video if you think this will be of interest to anyone you know. All right, y'all ready to get into it? So what do I consider broke people? What's broke people stuff? If you have an idea of what broke people stuff is or what broke people stuff you've been doing with your money, drop it in the chat. Let's talk about it. Drop it in the chat. But some of the broke people stuff I used to do with my money, and if you do this, let's stop. I was using credit cards to buy Christmas. Using credit cards to buy Christmas gifts that I could not afford. Even if it was on sale for $29.99 or one of those Black Friday sales, buy one, get one free, buy one, get a $100 gift card. If I didn't have the money in the bank, I couldn't afford it. But I was buying it anyway and put it on a credit card. Anybody doing that? Let's stop doing broke people stuff. Another thing I used to do, paying my rent late in January because I used my bill money to buy Christmas gifts. Who's done that? Is it just me? Is it just me? How the meme go? Am I the problem? Am I the problem? Yes, I used to pay my January bills late so I could use the money on Christmas things, whether it was gifts, whether it was decorations, whether it was travel, putting gas in my car to drive home for the holiday. Yeah, I did that too. Another thing, broke people going all out for Christmas because you're planning to get out of the hole during tax time. I'll add to that. Let's back up. You're relying on tax time. You're relying on that tax refund check to catch up on your bills. That's some broke people shit. That's some broke people shit. Who's done it? Who's still doing it now? Ingrid said she did that in 2020 when she was stressed. I did it. I did it. I'm sure we've all done it. Buying things I don't really need just because they're on sale. Yes. Guess what I did this month? That's broke people. I'm calling myself out on it. Bath and Body Works has a semi-annual sale every year on their candles. Why I need more candles? I got about 10 candles that haven't been burned yet. I got so many candles, I was giving them away for Christmas gifts at one time. I don't even have a home. I am literally, when I'm in the United States, homeless. Why I'm buying candles? Why? That's some broke people. I bought them because they were on sale. That's it. I bought it because they were on sale. Eileen said, I know I'm the problem. Yes. Since we the problem together. You are not alone. Kelly, did I step on your toes? Did I step on your toes a little bit? I'm sorry. But let's stop doing broke people. Black Women Build Wealth said, I hear you on that. Then tax time doesn't turn out like you expected. Talk about it. Talk about it. Kerry said, I'm stepping on some next. Yes. And I'm not ashamed to call it out. And I'm not afraid to offend anyone when I call it out because I did it too. But as your financial bestie, I also want to tell you what your bestie can tell you that no one else can without you being offended. Let's stop doing that, broke people. Let's talk about what we could do with our money so that we end the year on a high note, not in the hole and relying on a tax refund check to get us out of the hole. That tax refund check can be used to make new money babies. That tax refund check can be used to help us get ahead instead of helping us to dig out of the hole. So what other kind of broke people you used to do back in the day? Miss B said she did it when her children was little. Yes, that's exactly why I did it. That single mom life. We are here, sis. We are here. I understand. Let's see what my sis Eileen talking about. I literally have so much skincare products that I have a 3-drawer storage bin full. My goal is to use it all up before I even look at that website again. Girl, I get it. Why? Why do we need more skincare products? Why did I need more candles? I didn't. I just bought it because it was on sale. But let's stop doing that broke people stuff. And let's put our money to work so that our money is making money babies so we can get off the corporate slave ship and stop doing the work ourselves. Right? Ooh, this is a good one. Buying a new car when I only went to the dealership for oil change. Ooh, that hurt. That hurt my chest. They manipulated you, sis. Walked out with a whole new car. And this might be a whole separate video. But another thing that broke people do, that's broke people, is buying things based on the monthly payment. Oh, I can afford that new car because I can afford the monthly payment. And the monthly payment sounds very small in the big scheme of things because you're looking at that one bill by itself. A monthly payment of $500 doesn't sound like a lot by itself. But when you add in that $1,500 rent, when you add in that $300, maybe $400 insurance premium, when you add in the cost of maintenance, the regular maintenance, we're not even getting to the actual repairs when the car breaks down, but the regular maintenance to prevent the car from breaking down. When you add in your utility bills, when you add in your credit card bills, when you add in all those other bills, can you afford that car payment? And Kelly, I'm not talking about you specifically. I'm not talking about you specifically, sis, but yes, that's another conversation for another day. A whole separate video. making financial decisions and buying things based on the monthly payment instead of considering the total cost of ownership. That's some broke people. Yes, definitely a lesson learned. Yes, definitely a lesson learned. So, if we are no longer doing broke people stuff, let's talk about the 5 millionaire moves to make before the end of 2023. This is what I've been doing all of December. Remember last week, I shared with you how I manage my personal finances to prep for the end of the year. I talked about my checking account, my savings account, and things like that. I talked about how I review my expenses and how I create my spend plan for the next year. All of that is my basic personal finance. This week, I want to share with you what I do with my investments to prepare for the end of the year and also to ensure that I can continue making money babies throughout 2024. Because y'all know I ain't got no job. Y'all know I'm like Tommy. I'm y'all best friend, Tommy. I ain't got no job. But I still be making money somehow. This is what I do with my finances to make sure I can continue making those money babies in 2024. So let's get into it. All right. The very first thing I do, everything starts with a review. Y'all should not be surprised by that by now. Everything starts with a review. So the first thing I do is review all of my investment accounts. I review all of my investment accounts to make sure that I've contributed the amount that I intended to contribute for the year. When I was employed, that would include my 401k and my HSA whenever I had the required high deductible health plan for that year. And it also included my Roth IRA. So for you, the maximum in 2023 that you can contribute to your 401k is $22,500 if you're 50 or under. If you're over 50, you get a little bit more. But I'm not sure if we have anybody over 50 in the chat right now. But you get to contribute what's called makeup contributions if you're over 50. But if you had a goal at the beginning of the year to contribute a certain amount or to max out your 401k, I look at those accounts to see if I've achieved that goal. And if I haven't yet, I will see if there's any money that I can move around to top up that account to make sure I've achieved my goal for the year. For the IRA, the maximum you can contribute is $6,500 if you're 50 and under. If you're over 50, you get to do catch-up contributions again in your IRA, and that's an extra $1,000 in your IRA. Okay. For me, as a self-employed person, I no longer have access to a traditional 401k, but I do have access to a solo 401k, and I no longer have access to a traditional IRA, but I also have access now to what's called a SEP IRA. I still have access to an HSA because I still have a high deductible health plan, although I'm solely responsible for it and I'm paying the entire premium out of pocket myself. I'm no longer in a group plan with an employer, and it's expensive as heck. But I established goals at the beginning of 2023 to contribute a certain amount to my solo 401k, my SEP IRA, and my HSA. So as part of my December checks, I look at all of those accounts to make sure that I've met my goal. And if I have not, I will move money into the goal before December 31st to make sure that I have topped up to meet the goal that I established for myself. But for you, for IRA, you have until April, until the tax deadline of the next year. So let's say the tax deadline is April 15th. You have until April 15th to top up your contributions for 2023 in your IRA. So let's say your goal for this year was to max out your IRA, $6,500, 50 and under, $7,500 for over 50, right? And let's say you only have $5,000 in it right now. So you can technically contribute another $1,500 to your IRA. And you have until April 15th next year to contribute up to the max of your 2023 IRA. Okay. Another thing I do in this step of the process is I have what's called a donor advised fund. A donor advised fund. So when you make contributions to charities of your choice, or when you make contributions to any cause that's near and dear to your heart, if you have donated to Palestine, if you have donated to what's going on in the Congo, if you've donated any money to a cause that's near and dear to your heart, first of all, I commend you for that. But for me, when I donate, I'm very strategic about my donations. Okay. I don't donate randomly, I don't donate willy nilly. Everything I do is with a purpose, and everything I do first is making sure I'm creating money babies, and then I spend. And that includes my donations. So, what a donor advised fund is, and I won't get into a lot of detail in this video, but I just want to give you like an overview of it. So, what a donor advised fund does is it allows investors to plan in advance. The same way I plan my spending for the whole year in my spend plan, I plan everything in advance. So, I plan in advance how much I want to donate for the year. So, even if I don't send that money to Congo right now, even if I don't send that money to Palestine right now, when I decide at the beginning of the year that I plan to donate, let's say $10,000 throughout the year, I put that money in my donor advised fund and I invest it. And I invest it because I want that $10,000 to grow. And what that allows me to do, it allows me to get the tax write off from the contribution into the donor advised fund, because I've already told the IRS that I intend to donate this money. So I immediately get to write off all $10,000, even though I haven't donated it to anyone yet. I just put it in the donor advised fund, and that becomes a write off for me. So at the beginning of the year, if I said, Malika, we're going to donate $10,000 this year, and I've only contributed $9,500 to my donor advised fund, I go ahead and I top that up to make sure I get the full $10,000 write off for this year. And when I am ready to donate to a cause that's near and dear to my heart, that $10,000, because it's been invested in the stock market, it can grow just like my other investments. So although I only contributed $10,000 to invest, I may end up with $12,000 that I can give to a cause that I love. And I already got the tax write off from it all in advance, right? Make sense? So I'm reviewing all of my accounts to make sure I've done what I said I was going to do. And if I need to top up any account to make sure I have done what I said I was going to do, I will move money around to put it in the respective account as needed. Right? Any questions about step 1? Millionaire moves to make to end 2023 and prepare your finances to continue making money babies in 2024. That's what we're talking about. So let's move on to step number 2. Step number 2. But first, let me look at the comments to make sure I didn't miss any questions. I love y'all questions. If you have questions about anything I'm sharing, feel free to ask. Malika, let's see, Kimmy said, when I did the percentage of my outgoing expenses versus income, I was shocked. It was way higher than I thought. Yes, that's what happens when you track your expenses. What KJ saying? This has been great, but I've got to catch the rest of the replay. Okay, I will see you later, sis. Thank you for coming. I appreciate you. Yes, dropping gems for my besties. Yes, dropping gems for my besties. Let's see, Eileen. Is that a special type of brokerage account or like a high yield savings account? Assuming this question is about the donor advised fund. it was not clear as it's written here. And I'm not sure the timing of when you asked the question, but I'm assuming it's about the donor advised fund. You can open up this account separately in your brokerage account. Okay. You can open up this separately in your brokerage account. Yes, that donor account is a brilliant idea. We have nothing like that in Canada that I know of. Okay. Problem, not a problem. Hey, Venus made the live. Venus made the live. Shalonda never heard of a donor advised account. There's a whole lot more I can teach you, sis. You just took one of my programs. Shalonda just completed Invest with Ease. You just took one of my programs. There's so much more I can teach you. Yes, to the donor advised one. Okay. Moving on to number 2. The second thing I do is review my asset allocation. I review my asset allocation in my long-term portfolio. And the reason why I review my asset allocation is because I want to make sure it's not imbalanced. And for those who may not know, your asset allocation is basically like a percentage of what you want to invest in stocks, and a percentage of what you want to invest in bonds, and a percentage of what you want to invest in cash equivalent accounts. And this is based on your risk tolerance. In my Invest with Ease program, I teach you how to do all of that. Shalonda, I'm sure you can speak to that, but you learn how to do all that in the Invest with Ease program. But once you know what your risk tolerance is and what your recommended asset allocation is, you invest based on that allocation. Well, throughout the year, certain assets grow and certain assets lag behind. So the balance will get out of alignment, right? So let's say my asset allocation is, I don't know, 70% stocks and 30% bonds. So let's say it was a great year in the stock market and the stocks just went on a run, just beautiful, right? Kind of like what 2023 has been. The stock just went on a run. And let's say my portfolio becomes imbalanced and I start leaning more towards like 85% stock and only 15% bonds. That may be a little risky, a little more risky than what I can tolerate. So I will rebalance that to make sure that it's back in alignment with what my risk tolerance is. And there's several ways you can do that. Won't get into it tonight, but that is another thing that I do. I review my portfolio to make sure that my assets are aligned with my risk tolerance. And if not, I will rebalance them if necessary. Okay. Any questions about asset allocation and rebalancing your asset allocation? The next one is very interesting. I have not done this yet. But in step number 3, I review my P&L. And your P&L is just basically your profit and loss statement. I review my P&L in my short-term portfolio. So I have separate portfolios for different things. The other day I was on Adelia's live. Adele, by the way, Adelia has been doing Vlogmas. So she's been going live like every day for the first, I think, 25 days of December. But she had a live and someone asked her, is there a reason to have multiple investment accounts? And for her, there is no reason to have multiple investment accounts. But I explained to her that I have multiple because I keep my get rich money and my stay rich money separate. I do not commingle my get rich money and my stay rich money because there are certain things I do with my get rich money account that's a little higher risk than I'm willing to take in my stay rich money account. And there's 2 separate skill sets too to manage them. But anyway, so this step number 3, reviewing my P&L, this is in my get rich account. This is where I do a lot of short-term things, a lot of short-term trading. But I review my P&L to determine if I have any assets that are underperforming. I review my P&L to determine if I have any assets that are underperforming, right? And if I have anything in my account that's underperforming, and I have, or if I have closed out any positions and I have realized losses, I will look to see if there's anything that I can sell to take the profits, right? If you sell anything at a profit short term, your tax rate is going to be higher than regular capital gains tax. Your tax rate is going to be your regular tax rate that you earn from regular earned income. I don't want to pay high taxes when I take profit from my short-term portfolio. So I review my P&L to see what losses I've realized, and I look to see if there's any profit that I want to take that will offset the losses, right? And the flip of that is if there's anything lagging in my account and I don't see it, I don't see the performance getting back up to where I think it needs to be, or it's something where I'm ready to cut my losses and just take the loss, right? Everything is not a win all the time. You're not going to be perfect. As an investor, you're not going to be perfect if you're a trader. Everything is not a win all the time. So sometimes I evaluate things to determine if I need to take the loss on this, right? But before I take the loss, I also look at where I want to take profit because they offset each other. And doing those simultaneously, meaning like in the same tax year, that's called tax loss harvesting. Tax loss harvesting. I don't want to pay taxes on my gains, especially short-term gains. So I may cut my losses on some things that are underperforming, and that offsets. It offsets the gains that I would have paid taxes on, and that is called tax loss harvesting, right? And if I have no losses that I want to realize, realizing your losses can be a strategic decision that you make. It does not and should not be an emotional decision because you were trying to trade instead of investing and you don't know what to do and you don't even know what you bought when you were trading and you're freaking out and you sell it. That's not a strategic move. That's not what I'm talking about here. I mean, when I decide to strategically cut my losses on certain underperforming assets because I'm trying to make sure I offset my gains. If I don't have any losses, of course, that's great. I may postpone taking profit. I may postpone taking profit in January so that it becomes a gain that I realize in the new tax year. So that's a decision that I have to make, a tax-based decision that I have to make at the end of the year to decide when I want to take those gains or when I want to realize the loss, right? They go hand in hand. And when you do it strategically, you can minimize your tax liability. So that is step number 3. Any questions about step number 3? Any investors in the house? Any investors in the house that, let's say you started investing and you've learned over the years how to become a better investor. And let's say you made some investments in the past when you were gambling, for lack of a better word, and you no longer want to hold on to those initial assets that you bought because you realized that you were gambling when you bought them and they actually weren't very good investments to begin with. Is there a point where you decide to cut your losses and get rid of them? Or do you continue holding on to them indefinitely and just let them continue weighing down your portfolio? How do you deal with that? How do you handle that? Has anyone experienced that? Black Women Build Wealth says she's terrible at selling her losers. Why do you say that? Why do you hold on to losers that weigh down your portfolio? It's like staying in a bad relationship with a man that you know is no good for you, with a man that doesn't support you, with a man that's not helping you create a brighter future, right? It's like staying in a relationship with an abusive partner, right? Let's not hold on to those losers too long. But when you decide to realize the loss, do it strategically. Do it strategically. And if you don't know how to do it, this is where I would recommend that you speak with a accountant, a tax accountant, a CPA. This is not something I can help you with. This is not my lane. I can do it for myself, but it's not something I help other people with. This is not my lane. You have to consult an expert for that. Yeah. Thanks for the reminder. I got a few to get rid of. Yes, yes. I keep hoping the price will come back up. Woo, if you were in my coaching program, I would drag you right now. I'm kidding. But like I tell my clients, hope is not a strategy. Hope is not an investing strategy. You have to do an analysis, the fundamental analysis, to determine what the headwinds are, to determine why it's down. You have to do a technical analysis. Look to the left on your charts to see what the historical performance is, to see what the indicators are telling you, see what price action is telling you. And if it does come back up, how far up will it go? The charts will be able to tell you that. And the data that you collect from your analysis, you can use that data to make an informed decision, because hope is not a strategy. Right? We don't hope a stock is going to do anything. Right? Eileen. By the way, that little symbol next to Eileen's name, that tells me that she is in my YouTube membership. If you were not aware, I have now created a YouTube membership that has 2 levels. The first level of membership is just for my financial besties that want to support the channel. You will get the priority replies to your comments and questions. You'll get the cute little emojis that I created. I need to figure out why Eileen's emojis weren't working, because I love them. They're so cute. You will also receive a few other perks. You can hit the join button below the video to see about the perks of the membership. But the second level of the VIP membership, which is the one I'm most excited about, the second level of the VIP membership, we will have VIP member only lives. And you will also have access to VIP member only live chats. And in the lives, all these things that I'm sharing with you and explaining to you what I do, in the lives, I will show you how I do it. So in the lives, I am going to pull back the curtains. I'm going to pull back the curtains and share my personal finances, everything I do, from the personal finance management of my expenses, my spend plan, all the way through to my investments and building wealth, and the way I manage my multi-7-figure portfolio. So I will share all of that on the VIP only live streams. You can feel free to ask questions. I will answer all of your questions, and I will be showing what I do, when I do it, why I do it, and how I do it. So if you're interested in joining the membership, hit that button, that join button right below this video. And I will love to hang out with you during the first VIP only live that I'm planning to do. I think it's next weekend. It'll be my birthday live. That's coming up this month. I'm excited about it. But anyway, yes, I'm a baby investor, and I'm not sure how frequently I should be checking in or selling. For you, my friend, you should not be checking or selling anything. If you just learned how to invest, what you need to be focusing on is just building your account and accumulating assets. What I do is more of managing my assets as an active investor. I'm a more active investor, a hands on investor. And the account that I was talking about, buying and selling from, that's my short term account. That's the account that I use to trade. So that is for traders only. For new investors, you should be investing long term and focusing on the long term only. So you shouldn't have to check anything. I mean, if you want to log into your account occasionally, like maybe once a quarter, when I get to the next couple of steps, you'll understand why I'm saying once a quarter, maybe once a quarter, just to, check your balance, see how things looking. But you shouldn't be checking too often or trying to sell anything. Because if you don't understand how to do fundamental analysis and technical analysis, you'll be essentially gambling because you'll be guessing and hoping. And like I said, hope is not a strategy. Hope is not a strategy. See, I know it's not a good thing, though. I think it's also, despite the rest of my portfolio is doing great. So the impact of the losers is minimal. The impact of the losers is not minimal. I challenge that thought. And the reason why is because the impact is not only what you see today, the impact is also opportunity for the future. So that money that you have tied up in losses, that's money that's not performing for you. That's money that could also be growing and making money babies. So the impact is substantial when you hold on to losses and you're just hoping it goes back up. In my coaching program, I talk to my clients about their money in terms of running a business, right? And we refer to our dollars as employees. Every dollar that we earn is an employee that works for our corporation. So that money that you have tied up in the loss that you say is minimal, that's like you being the CEO of a corporation and you have 5 employees that clock in and sit on the bench all day. Your entire corporation may have 1,000 employees, but 5 of them clock in every day and just sit on the bench. And you say, oh, the impact of them to my business is minimal. Is it? So I challenge you to reconsider that thought process. Okay? Challenge you to reconsider that thought process because those employees need to be working for you at their maximum capacity at all times in creating money babies so you don't have to work. Right? Okay. Moving on. Next one. What is this? Number 1, 2, 3, 4. The fourth thing I do is I update my net worth. I update my net worth. And your net worth, traditional definition, is just basically a list of all of your assets minus a list of all of your debts. The value of everything you own minus the value of everything you owe. And the reason why I update my net worth is actually something I do every quarter. Your net worth it's an indication of your financial health. I don't want you to confuse it with your net worth in terms of your value as a person. It's not. It's not a reflection of your value as a person, but it's a snapshot in time that gives you a view of your financial health. And I update my net worth at the end of every quarter. And the reason why I update my net worth at the end of every quarter, and what I'm doing here in December, it's the Q4 update, but then I look at it for the entire year. The reason why I update my net worth at the end of every quarter is several reasons, but the top 2 or 3 is number 1, I receive a lot of dividends once a quarter. So when I receive those dividends, I want to track the changes in my account. So when I'm looking at my long-term accounts, it's not something that I check on frequently. Like in my short-term accounts, when I'm trading, I may look at that account several times a week. I don't look at my long-term accounts that much. So when I look at my long-term accounts, it's once a quarter because I'm updating the new balance in my net worth to capture the new dividend. So that is something that I recommend that you do as well. Even if you don't do it every quarter, at least do it once or twice a year so that you are aware of your financial health. A lot of people think, oh, I earn a good salary. I made $80,000 this year. Or I have a side hustle, and between my job and my side hustle, I made $150,000 this year. Or I have a business and my business is growing, and I made $250,000 this year. Your income is not an indication of your financial health. You have to run the numbers, know your net worth, add up the value of everything you own. Building wealth is about accumulating assets. Your income means absolutely nothing. You can earn $500,000 this year. If your expenses are $550,000, you still broke. So calculate your net worth so that you have a clear picture of your financial health. If there is anyone that needs like a template or something, let me know in the comments and I can include one in the description if you need it. But you can Google good net worth templates. I'm a spreadsheet person, so I put my own spreadsheet together that I use to track my net worth, and what I use in my coaching program, what I give my clients is something I created myself. I love spreadsheets. I'm a spreadsheet nerd. But there are all kinds of net worth spreadsheets and net worth calculators out there. Just Google them. But if you need a good one, let me know and I'll put one in the description box for you. But calculate your net worth before the year ends so that you get a snapshot of your financial health before going into 2024. And that can also help you identify what you need to focus on in the new year. Okay. The last one. I review my FIRE account, the Financial Independence Retire Early account. That was a separate account that I created when I was on my FIRE journey. So I review my FIRE account. So if you have a separate FIRE account, right? If you don't, I will recommend that you have an account and name it. Name it Eileen on fire, right? Name it Venus on fire. Name it L on fire. If that is your goal, right? Name that account so that it clearly identifies your goal. But I review my FIRE account in this phase of my life. I no longer contribute to that account. It's just making money babies for me now. So it continues to grow, but it's growing on its own. I don't add anything to it, right? But I review this account to determine what percentage I want to draw down. So as I mentioned earlier, 2023 is my first full year of being unemployed. Every time I say that, it's so funny to me. But 2023 is my first full year of being unemployed. So I haven't had any drawdowns from this account yet. I have been solely living on money that I make through coaching or money I make through trading. But the last 4 months, I haven't been trading at all because I've just been traveling and living my best life. And I've been in different time zones that have just made trading a little uncomfortable for me. And I'm the type of person, when I'm trading, I need to be completely focused and in my zone. I do not mess around in my trading account if I have any distractions at all. So I don't trade very often. But starting in 2024, I think I do want to start drawing down from my FIRE account because there's going to be a lot of things that I did at the end of 2022, and I did a little this year that I'm not going to do anymore. So I will rely on my fire account to support my lifestyle. I really just want to lean more into ease. I don't want to have to create new money if I don't want to. I don't want to have to do anything to make money. Like, I don't want to have to look at my business and say, I have to have this many clients or I have to make this many offers because I have to make this much money to live. That takes the fun out of it for me. Literally, I am so serious. I coach because I love it. I coach because I love my clients. I love seeing them have their light bulb moments. I love hearing the relief in their voice when they say, "Oh my God, this was always so confusing to me. I always wondered how that was done, and you make it sound so simple." I love that. I love helping another Black woman learn how to build wealth. It's fun to me. And the minute something starts feeling like work, I don't want to do it no more. So I don't want to get too caught up into having to meet certain milestones or having to meet certain goals just to maintain my lifestyle. I built this account for that exact purpose. So I don't have to. I didn't leave my employer to turn around and create more employment for myself. I want to be completely free and coach because I love it. I want to be completely free and trade because I enjoy it. I never want to feel like I have to do anything. And for me, that's the beauty of freedom. So I plan to start drawing down from my fire account in 2024. Now, the standard drawdown rate that you may hear most people talk about is about 4%. That's one of the reasons why you take your annual expenses and you multiply times 25, because once you reach that number, 4% of that will give you enough money to live on each year. Um, I won't necessarily need 4%. I probably will lean more towards 2%. I'm not sure yet, but this is one of the steps that I have not completed yet. I will probably do it in the last week of the month, but I'm going to determine what my drawdown percentage is going to be after I evaluate my expenses for this year, after I kind of plan out my travels for next year, where I want to be long term, or if I'm going to continue slow traveling or bopping around like I did this year. I was in 10 countries this year, y'all. I don't think I'm going to do that next year, but I need to decide what my life is going to look like next year so I can determine what my expenses are going to be and then decide how much drawdown I'm going to do. And whatever that number will be, I will probably shave profit from my account in January. That will either take me at least through the second quarter, or I may decide to take all of it for the year and just park it in my high yield savings account. Haven't decided yet, but that's a decision that I need to make when I review my fire account. So as you all are building your fire accounts, um, that number that you're targeting may seem lofty, it may seem overwhelming, and I encourage you to take it one step at a time, and bite off like bite-sized chunks of it. So if your fire number is $1 million, I know that can sound so overwhelming. It'll seem like, oh my goodness, I'm never going to get there. Break that down into smaller pieces. Focus on $100,000 first. And that's one of the reasons why in Invest with Ease, I teach you how to build your first $100,000 portfolio. That's my target. That's my goal. But the things that I teach you in the investment plan that I give you, you can continue to build on it from there. But I focus on your first $100,000. So focus on that first. If you already have 100,000, then focus on the next milestone, 250,000. Then the next one, a 500,000. Then the next one. So try to separate the larger goal into smaller pieces, because I don't want you to get discouraged and give up, because that big number is the number for a reason. It's the number for a reason, because once you get on the other side and you stop working, and let's say you stop creating income, like I might next year. I'll never stop coaching. So by the way, if you are considering any of my programs or working with me, I will never stop coaching completely, but I have scaled back a lot of the things that I do. I don't think I will be doing private coaching at all next year. I have also closed out one of my coaching programs, and I'm focusing exclusively on Invest with Ease only. So I'm scaling back a lot of things. So if when you get on the other side and you want the freedom to decide, I don't want to have to create money anymore, I want to 100% live off of my assets. That is why that number is what it is, so that you have enough assets to draw down from, whether it's 2%, 3%, or 4%. You don't want to go any more than 4%, because based on the Trinity study and all the other studies that have piggybacked off of the Trinity study, that 4% is like the sweet spot, but it's the edge of the sweet spot to make sure your money can last for the rest of your life, right? But you want that freedom to be able to stop working, to stop creating income, to truly lean into a life of ease. And that's a decision that I'm making for myself next year. It's not to say I won't trade anymore, but I don't want to feel like I have to trade. Anytime you feel like you have to do something, it's not fun. It takes the joy out of it. I want to create money when I feel like creating money, but I will much prefer my money create the money for me. So just keep that in mind. If you ever feel discouraged, or if you ever lose motivation when you're trying to build up to that number, whether you're trying to do coast fi, whatever version of fi that you're working on, whatever the number is, if you're not there yet, keep trucking, sis. Keep trucking. That number is there for a reason, and your money babies will take care of you when you get on the other side, so that you have the freedom to make the choice to create whatever you want your life to look like when you're work optional. Okay. Let's see. Let me check the comments. Check the comments. Gail said, living that best life. Yes, sis. Yes. I love it. I love it too. If you follow me on Instagram, I'm also at Money Coach Malika on Instagram. I did a post today that when I was writing it, I was crying. I was crying because sometimes I'm like, is this really my life? Is this really my life? It's wild. It's wild sometimes. But anyway, will you be selling shares or living off of dividends? Both. It depends. So remember when I said I had to evaluate how much of a drawdown I will need, and that's based on how much I anticipate spending next year. So after I evaluate all of that, right? And after I determine what my drawdown is, the first thing I'll do is turn off the drip. Right? The first thing I'll do is turn off the drip. So the dividends alone may be enough once I turn off the drip, right? But if the dividends are not enough, then yes, I will sell. Yes, I will sell to shave profit. Yep, that's what this account for. I built it up, and now it's time for me to draw it down. Yeah. So if the dividends are enough and turning off the drip is all I need, then yeah, that's all I will do. But yes, that is all I have for you ladies today. Was this content helpful? Was this video helpful? If it was, hit that like button. Hit that like button and share. Share the video. Share the video on all your platforms. Share it in your group text with your girlfriends. Share it in the group text with your family. I know y'all got a family chat talking about Christmas. I know y'all got a family chat talking about Christmas. Drop this video in the family chat so they can see the beginning of it when I'm talking about broke people and what we do around Christmas time. Share it with your family. But anyway, this has been fun. I will be busy doing all of these things the rest of the year, except next week. I'm taking next week completely off from all things money. Enjoying the holiday, enjoying my family, enjoying my birthday weekend. But yes, this is what I'll be doing for the rest of the month to prepare my money for 2024 so I can continue making money babies. So I hope that, look, why do I keep getting tongue tied? Lord have mercy. And by the way, when I'm doing pre recorded videos, all this stuff right here, this is the stuff I spend so much time editing out, all the tongue tied stuff. I know y'all don't want to see all that. But anyway, I I'll catch y'all next time. So continue learning, continue investing, and continue. What's my closeout phrase? Bye, y'all.